When it comes to consumer discretionary spending, it's more important to get the big things right. We're going to talk about that today on Open Interest. Hello, everybody, and welcome. I'm Mike Coe. Welcome to Open Mic. On my screen is probably one of the better examples of what it is that I am talking about. When it comes to consumer discretionary spending, the thing that matters most is the big stuff. We all have access to the quarterly financial statements, the 10Qs, the annual statements, the 10Ks, annual reports, all that kind of good stuff. Many of us have access to some sell-side research, so we can see consensus estimates and things like that. But where consensus estimates fall short is that when there is a big secular shift coming, sometimes that gets missed. So my barometer for things that relate to consumer discretionary spending has been sort of the typical Peter Lynch approach, grassroots, if you want to call it that. Typically what I have done, and I've referred to this in the past, is I have something that I call the Holly Index. What is the Holly Index? The Holly Index, Holly, if you don't know, it's the name of my wife. And for a long time, if I was interested in figuring out where households are spending their money, I would take a look at where she was spending ours, because she would do more of the household spending than I would. And also, when she would spend money on things, it was much more likely to be on things that had to do with what consumers favor at any given moment. So, an example. This is a good one. Apple has long been on the Holly Index. Even way before I was using an Apple phone, she preferred Apple products, Apple computers, and so on. So, long-time constituent of the Holly Index was Apple. What's another? This is on a lot of households' index, if they comprise their own, I'm sure, and that's Costco. So a lot of people do their bulk purchases there. Increasingly, I would assume that a lot of people are buying an ever larger percentage of the things that they purchase for their homes from Amazon. And one of the things that has happened also recently, this is a little bit against Costco more recently, we've ended up shopping more frequently at Whole Foods than we used to because, number one, after Whole Foods was acquired by Amazon, they made it easier to return things. If you had to return something that you purchased on Amazon, now you don't need to drop it off at UPS or arrange for somebody to pick it up. You just drop it off at Whole Foods and you don't even have to package it. They just scan it in and you're good to go. Also, after Amazon acquired Whole Foods, the prices came down. So there used to be a joke about Whole Foods, and probably many of you have heard it, is that Whole Foods was often referred to as whole paycheck because the prices were very high. We have some expensive grocery stores where I live, but Whole Foods really isn't one of them. Whole Foods is quite competitive in many instances with the local Safeway. If you really wanted to spend your whole paycheck, you might go to a grocery store named Molly Stone's, which is near here. And there are a couple other sort of more boutique-y type of grocery stores. They tend to cost a lot more. More recently, Tesla showed up on the list. My wife loves Teslas. She's on her second Tesla. She has leased her last two, and that actually pertains to what we're going to be talking about in just a second. But she was sort of enamored of Teslas before I was. I remember that I was fascinated by it as an EV. I was reading the reviews. I was pretty impressed by the fact that Consumer Reports actually had to change their scoring mechanism because the Model S, their first real model, excluding the Lotus-based Roadster that came out before that, was so good that when they tallied up all the scores after they first tested it, that the car scored over 100, and 100 was supposed to be as high as it could go. But the Tesla Model S actually scored above that, so Consumer Reports apparently had to adjust how they even score those tests so that they could actually fit the Model S into it. So Tesla is on the Holly Index. And I've referred to this in past years, but not so much recently, and I've actually explained why. Lululemon was for a very long time part of the Holly Index. It was her favorite place to, get athleisure apparel. It was a default gift of mine. I could go into a Lulu and get a gift card and put it as a stocking stuffer or whatever, and it was always well received. And that was true up until a few years ago. December of 2023 was the first year where I didn't actually get gift cards from Lulu for her, because by that time she had decided that she preferred another athletic apparel company called Vuori, which is, I couldn't put that one on the Holly Index because it's not publicly traded, but she preferred it. I happen to be wearing some Vuori pants right now that she bought me. Personally, I'm not 100% sure I get what all the fuss is about as far as Vuori is concerned, but it was wise, as it turned out, to pay attention to her consumer preferences in this case. As you can see here, shortly after she lost interest in it, apparently a lot of other people did too. And their sales growth slowed considerably. Another example of this was Nike. So my kids really liked Nike shoes. I guess they were getting collectible for a period. In fact, we actually had my older son Sam on Options Action. You can see above my left shoulder, the NASDAQ in New York. And his comment was, buy Nike shoes, not Nike stock. Good thing, too, Nike stock hasn't done very well since he said that. But the other interesting thing is that we actually pretty much stopped buying Nike shoes thereafter, because the household's preference has instead pivoted towards On, which is ON. ON is the ticker for On Holdings. And that brings me back to Tesla, which is what I was alluding to. So she has had 2 Teslas, and she has leased the last 2 that she's had, and her lease expires in early December. So I think there's about 5 months remaining, and we happened to be driving recently, and she said, oh, there's the car that I want. And the car that was driving by, I thought was a Rivian R1S, and she said, no, that's the new one, that's the small one. Now, I hadn't really been keeping up with what Rivian has been up to. I'm kind of a car guy, so it's a little bit of a surprise that I didn't really know that much about it. But she said, that's the car that I want. So when we got home, I decided to look into it just out of curiosity. I said, well, what is the R2 anyway? And there are a couple around here, apparently. And let me see if I can, here we are. So the R2 is their new model. So if you can see here, the R1S on the left, if you've seen a Rivian SUV near you, very likely that that's the one that you have seen. The R1T, this EV pickup truck, a friend of my son's, his dad, who lives right down the street from me, they have one of these things. This one over here on the right, that is the R2. And the important thing I would draw your attention to is the price. Notice that this thing starts at about $45,000. That does not include destination, and this is for a 2-wheel drive version, which probably most people aren't going to be buying, and that one isn't even going to be available, I think, until the middle of next year. But even if you do a more up-spec version than that, let me see here, you are probably dealing with something that is less than $60,000. So this is the Performance Edition. That one is $57,900, and you can see that that has quite a lot of performance, probably a lot more than most people need. 0 to 60 in less than 4 seconds. 330-mile range. Why is that important? That's the same as the Model Y. I'm going to get more to this sort of back and forth here and a little bit of the financials and so on. She's probably going to land with this thing. She did reserve one, as it happens. Now, because she reserved one, that means that Rivian shares had to be at least considered for the Holly Index, because that was a trend shift. I never was under the impression that she was going to drive anything other than a Tesla, because she's never indicated to me that she had any interest in any other kind of car. But suddenly she does. Then she mentioned that one of the people that she works with also ordered one. So I started to take a look at some statistics for Tesla and for Rivian So let's bring this chart back up. So this is the chart of Rivian. And it's not a very pretty looking one. As you can see, back here at its peak, the stock was trading around 173 bucks. It's 20 now. That is up considerably, by the way. If we shorten this up, you're going to see this is up a ton since the mid-May lows. This thing was trading around 13 bucks a share, and if we go back to last August, it was less than 12, right? So it's nearly, as you can see, and it's a very volatile situation. This is what I wanted to point out, though, and that is that if you look at Rivian as a company, as the chart would suggest, negative free cash flow. This was also true for Tesla at one time. They have ample cash for now, about $4.8 billion as of the most recently reported quarter. But they're probably going to chew through every bit of it over the course of the next 12 months or so. This $4.2 billion in free cash flow, negative free cash flow, that includes this first quarter as well. So if we just take a look, if you're trying to say, okay, well, how much by the end of the year? I'll just look at it quarterly. You can see that in the first quarter they went through about $1 billion. So it's about $1 billion a quarter that they're going through. But this is the part where I think it gets kind of interesting. So this price segment, $45,000 to $55,000 SUVs, is pretty much the sweet spot for the American car market. And this is, on the EV side, the area that Tesla has utterly dominated. So if we take a look at the sales for Rivian, you're going to notice that, and this is quarters, I'm going to go to annual now. You're going to notice that Rivian sold 42,247 cars in full calendar year 2025. All right? So let's ignore for the moment the profitability. Let's ignore for the moment free cash flow, which, as you guys know, free cash flow for me is pretty much the thing that matters almost more than anything else. But just taking a look at secular trends, total addressable market, how large this thing can possibly be. So they did 42,000 deliveries in 2025, and the company's got a market cap of about $23 billion. So if we just do a little bit of quick math, so $23 billion, and we'll call it 42.250. That's about, the company is valued at the moment at just over $500,000 per car sold per annum last year. All right. Now, that's not really the way we normally think about evaluating car companies. Ford, last I looked, was $55 billion market cap. They probably did something in the neighborhood. I mean, it's going to be probably in the $6 million delivery range. Let's just take a look. So I said 55 billion, pretty close, 55.1. And in terms of deliveries, what do we got here? Units sold, actually less than I thought. I would have thought it would be a little bit higher than that. 4.4 million cars sold. Now we take a look at Tesla. Tesla is valued, as all will know, at $1.5 trillion. Now they did 1.6 million in deliveries last year. But here's where it gets very interesting. Of the cars that Tesla delivered last year, 1.6 million, they have the following models. The original, which is the Model S, the Falcon Wing door high-spec SUV, the Model X, both of which have been discontinued, the Cybertruck, the Model Y, and the Model 3. The S, the X, and the Cybertruck collectively represented less than 4% of all sales for Tesla in 2025. So effectively, 1.6 million vehicles sold was in the Model 3 and the Model Y, which is exactly where the Rivian R2 lands. The R1S, the R1T, those vehicles compete with, well, arguably the Cybertruck. There's, some divisive styling issues. I'm not sure there's complete crossover. I kind of think that the person who buys a Cybertruck, I'm not sure what the alternative to that would be. Maybe the person who buys a Cybertruck would only buy a Cybertruck, or maybe they'd buy a Lamborghini instead. I'm not sure. The S and the X have been canceled. But really my point is that this R2 is going right after the meat of the U.S. car market, right after the meat of the U.S. EV market. This potentially could be huge if it is well received. Now, I don't know whether, my wife's decision to buy one, the fact that one of her colleagues is buying one, the fact that somebody else in my family who lives on the East Coast became more intrigued when they found out that you could get one of these things for around $50,000, tried to schedule a demo, and they didn't even have any available appointments. In fact, they didn't even have a mechanism. They just said there are no demos available at the location near you. They're all booked, fully booked. Now, they can't completely narrow the gap. Why? Because Rivian themselves have said that they have, at best, the capacity, I think, to produce something like 100,000 of these things over the course of the next year. But there was a time when everybody said, how is Tesla ever going to produce, a meaningful number of EVs and do so profitably? And yet they managed to. From the reviews I've been seeing, this thing is fairly well received. So, my thinking is twofold. One, the entirety of the sort of mid-$50,000 mid-sized SUV market in the United States isn't likely going to expand materially because Rivian came on the scene. My guess is that what Rivian sells, Tesla will not sell. Big deal at first? Probably not. But there is something else. And that is that, just going to this whole conversation of deliveries, in Tesla's case, they announced right before the holiday, I hope you all had a good holiday, by the way, on July 2nd, so last Thursday, Tesla released their sales numbers for the second quarter. And they were good. 460, I'm going by memory, but I'm pretty sure I'm in the neighborhood. 460,000 produced, 480,000 deliveries. That was substantially above the anticipated deliveries, which, if I remember what I was seeing from the sell side, was going to be in the neighborhood of 416,000 or thereabouts. Considerably lower. That's a big beat, right? So now you're getting up into a run rate delivery that's going to be just over 1.9 million vehicles if they could keep that up. Now, summer is a travel season. Maybe there was some pent-up demand. There are a couple things going on there. But what is interesting about this, let's just take a look at the stock really quickly, is that it didn't really perform as well as you would have thought. I mean, the 480,000 deliveries basically blew the doors off the, seems like it's appropriate to make a kind of a car-based analogy, off of what the street had been expecting. And yet the stock sold off. Now, it bounced back today. Not quite to where it was before those numbers came out. But when you start to see a stock behave a little poorly on the heels of good news, it's hard to get enthusiastic. You begin to suspect that a lot of good news is priced in. And a lot of good news would have to be priced in. The company's priced at $1.5 trillion. Everybody watching probably knows that I think Elon Musk has done incredible things. I think Tesla has done incredible things. I think they produce an excellent car. However, the Holly Index is determined by what she decides to do with the money, not what I happen to think of the founder or their products. And so, Tesla is hereby removed from the Holly Index. And strange as it may seem, Rivian now has to make the list. And if they get valued, Tesla's in the neighborhood of I mean, it's closing on $1 million market cap per car sold, right? So it's over 1.5 trillion. 1.6 million was last year's sales numbers. Do I think that Rivian could get to a valuation like this? I do not. Do I think it can grow into its valuation if they can figure out how to sell these R2s profitably? Conceivably, sure. They're going after the right segment in the market. And one of the very important things is that they have done, from what I've been watching and paying attention to from an architecture standpoint, the company has done a lot to bring the manufacturing costs for these vehicles in considerably. So there's a lot less, there's miles less wire in the car. There is, in addition to that, they're using a slightly different battery technology in this one, so it has far fewer cells than the R1S and the R1T do, so considerably lower manufacturing cost. They have given some thought to, these cars can be very expensive to repair if they are involved in a collision. And so that is a big deterrent for people who are shopping in this segment versus the more expensive cars. So they have given considerable thought to that, and they've made it so that it is less expensive to repair the car. They have a couple other cool features. So up to you guys whether you want to go out and buy one. I'm not necessarily going to get into the car recommendation business, although this one does seem fairly intriguing in terms of its feature set, in terms of its size. The range is about the same. I think they're doing, it's not quite as aerodynamic as a Model 3 or a Model Y, but they're getting good efficiency out of these things. And if you happen to live in high gasoline areas like we do, something like this could be exceptionally appealing. So ways to trade this. This is a high volatility stock. I would offer the following, which is that I'm not crazy about chasing the stock after such a strong rally. That's the first thing. Secondly, because the company has such a cash flow burn, they're going to need to raise additional capital. They could float additional debt. They have about I think it's like 1.8 billion in net debt right now. That's why the enterprise value is just slightly higher than the market cap. So, you're looking at 25 billion-ish in enterprise value, a little over 23 billion in terms of market cap. At that valuation, I don't think a secondary would be unreasonable. Now, I'm sure that there's some equity holders who would probably prefer that you raise debt to equity, but at like I said, $540,000, $550,000 market cap per vehicle sold, I would argue that the management would be very wise to consider selling little stock on this big rally. So the way to play that, I think, is actually by just going out and simply selling some downside puts. When I wrote about this, I had actually recommended selling the 16s, which you can collect about 85 cents for those. That's 5.3% of the current stock price. You're going to collect, I was looking actually at August, not these. And those have already come in a little bit because the stock was up yet again today. And oh, by the way, if you're interested where, when, and how I was recommending it, I wrote an article on the CNBC website, which was published this morning, I believe, or perhaps late last night. I wrote the article over the weekend. CNBC.com/options-action. That's where you can see my most recent articles. And I usually will do a much shorter, not nearly as in-depth kind of video as this, but where I just quickly explain the strategy. I don't